Okay, before or after, I don't want to be wasting too much of your lunchtime. And again, thanks a ton for joining us today. I'm Bert Copeland with New Life CFO Services. And again, this is the fourth in a four-part series about accounting wellness. And the general theme is it's very hard to make good decisions with bad numbers, or as it says here, bad numbers lead to bad decisions. And oh my gosh, I see that we have several accountants and CPAs on the group, and they know that very well. That's very, very true. So as we go forward, just as a refresher, some of the other events that we did over the summer, we had three. The first was accounting ROI and why is it important to invest in it? And then symptoms that your accounting processes are sick and possibly in need of improvement. The second one that we did in May was accountant qualifications and what does great reporting look like? The third one, we skipped a month and did the third one in July, and that was accounting systems and systems snare traps. It's one of my favorite topics, and there's some love-hate relationships that I have with systems. And if you were with us last time, you heard me just talk loud and proud about my love and hate of certain systems. Today, we're going to be doing accounting black holes and fraud prevention. I don't know if everybody on here just has a dark side to them or is looking to see if they can get caught or making sure that your company's okay. This is one of my favorite topics as well. In fact, all four of my favorite topics. But anyways, the reason I mention all four is we have recordings of all of these. If you like what you hear today and you'd like to hear about some of these other topics, just send us a text or a message vis-a-vis LinkedIn, and we'll make sure that you get some of the recordings from our previous events. In September, we'll be starting a whole different series, and that one's going to be about successfully exiting your company and what it takes to make your company well prepared. But for now, it's all about accounting wellness. So the overall title is Accounting Black Holes and Fraud Prevention. Now, some of y'all may have just logged in to find out what is an accounting black hole. We all know what fraud is and fraud prevention. So accounting black holes, well, it's the trickier parts of accounting that if you're not aware that you have this going on in your company, especially those of you that are CEOs or somewhere in the C-suite, it's real easy for your accounting to get jacked up, and you need special attention if you have these types of accounting practices going on in your company. So when you step back, the real topic is revenue recognition and do I have a problem? Because you want to talk about one area of your business that will really mess up your accounting, it's revenue recognition. And the trick there is I'm going to stop saying you talk or you whatever, but as you dive into your numbers, the real reason this is important is when revenue recognition is out of kilter, it means your whole financials are out of kilter. And you are literally looking at massively bad data and trying to make good decisions. And what's really bad is because of the complexity of some of this accounting, it's easy for it to look a lot better than it should. And that's the real cautionary tale here, because a lot of business owners, they like the good news, and they're going to really try and present their accounting in a way that gives them the best possible reflection. And sometimes that's ignoring what's really going on because we like the good news. And so we're going to roll through the cautionary tales about what to look for and why this is important. Now, the next slide I'm getting ready to show you, all the CPAs that are on the call, you're going to kill me, but that's okay. I'm trying to communicate to a whole broader audience. So this is revenue rec in one slide. I'll move this over here just a little bit. Revenue rec in one slide. So why I'm pretty proud of this slide, and the reason I'm proud of it, if you went into all the technical pronouncements about revenue rec, you'd be looking at a book about that thick. And I'll tell you, some of the new revenue rec pronouncements, I think, have done more to dilute the utility of the numbers than enhance it. But in its simplest form, great and simple revenue rec is when delivery, billings, and revenue all happen at the same time. So you're probably thinking, well, gosh, give me an example of that. Great question. I'll be happy to give you an example. So the easiest example is hey, I buy widgets and I sell widgets. So that means that, you have a warehouse full of widgets, somebody places an order and you ship the widget, and in really good systems, when you ship it, it creates an invoice, and that invoice also creates revenue. So the whole delivery, billings, and revenue thing is lumped up into almost a single transaction. Very simple. It's hard for that to get sideways. And that way, you know, what's in your revenue really reflects what you delivered to some customer based upon their order. Now, when this thing gets sideways is when any one of these slices of this pie gets separated from the other slices and doesn't happen at the same time. Now, that's the reason I really wanted to highlight this. So when you're thinking about your business, if you had the delivery of your product or services that's happening on a different timeline that your billings are happening, that is possibly happening on a different timeline than when your revenues are showing up on your income statement, you are into a potential black hole. So just think about this and step back on your businesses. Are these things tightly knitted together, or are they separated by some event? We're going to get into some of the industries that really create separate events, but some of the topics that I want to make sure that we cover on this is black holes in your revenues. We're going to focus 100% today on revenues because that's where the biggest black holes, in my opinion, happen in your accounting and also lead to the greatest distortion in your ability to make good decisions. Now, why does this matter? I'll tell you, it's the entire theme of our total presentation about you can't make good decisions on bad information. Now, bear with me because I'm going to do a little accounting geek out here because I have a simple example later on in this, and we're going to talk more about it. But it's real easy for this to get really messed up about your cash, your liquidity, your cash flow, your revenue recognition. What are my real margins and how well am I doing? And more importantly, what is my real position of liabilities? And that's where it really gets messed up, especially not only running the company, but if you're trying to sell your company. Not knowing how this works well, when you go to sell your company, boy, I've seen a lot of deals get blown up just because of this very issue that revenue rec was not understood and not done well. The other thing, especially when you get into the thing about what's benefiting my cash flow, which is a positive. I love cash early and often, the more the better. Or when done wrong, am I building a Ponzi scheme? And we're going to get into that because it's easy, especially when you have percent complete going on, or you have milestone billings, and especially if you bill for startup services, or you have a big billing to start the project, you could end up growing a Ponzi scheme and not even know it. And it's a real dangerous place because you end up with a very large liability of work you have to complete, and possibly you've already spent the cash. Lastly, this point about Fred Astaire and Ginger Rogers, and I get it. I'm dating myself. Totally get it. But the whole adage is of Fred Astaire and Ginger Rogers is they were the best dance partners in their day, maybe ever, that everybody knew of. And that's really important because if you have one of these accounting processes where the three parts of the circle are disjointed on their timing, just know that that requires that your accounting folks and your operations folks and your executional folks have to be in close conversations and really be working off of each other's hip. And that's the analogy about really great dance partners. So the better they all are at talking to each other, coordinating the nuances about what's going on with the project versus what's showing up in the numbers, that conversation needs to be happening all the time. In fact, back in the day, I used to own a commercial flooring contractor. We did about 30 million, 25 to 30 million in annual revenues before the Great Recession. And that's another story altogether. But I'll tell you, we had a practice of what we called mid-month WIP. And a lot of people will do their WIP review or work in process, which is really where you're reviewing your projects after the month's end. We got into a process to where we did it during the middle of the month. And the reason we did that is it was then easy to say, okay, how's the project going? Which of course you want to know, but really what things are getting ready to change on the project, which things are ahead of schedule, behind schedule, and start coordinating both the billings of the work by month end so that the billings pretty much aligned with either the deliveries and possibly a little bit ahead to advance cash flow. But you also want to make sure that you were looking at your change orders and what changes were going on in the project. Because when those changes start happening relative to the original budget, and the accounting folks aren't aware of that, and it's not getting into the system, you will see your financials go crazy. In fact, the easiest way to tell if you have a problem in this area and you have one of those companies that has a project-based accounting is look at your gross margins. If your gross margins are bouncing all over the place month to month, sometimes it's 40%, sometimes it's 10%, 15%, and jumping all over, I will guarantee you that that volatility is telling you that you likely have a problem between the physical work going on and what's reflected in the accounting. It could mean that you just have bad execution, but a lot of times it's just this disconnect between the actual operations and what the accounting shop knows in the budget and in the actuals of the job is really very problematic. Now, I could actually do probably a whole semester class about revenue recognition, but that's not our intent today. Our intent is to make sure that you know enough where you can go back and go, oh my gosh, that sounds like me. And then go back and start making sure that your accountants are treating it properly and are educating you properly about what's going on in your shop. So we're just raising awareness so that you can go back and says, I think that's me, and we need to look at this more closely. For a lot of y'all that do have audited financials, or you have a good CPA that's aligned with your business, that would be also a good time to have them come through and work through the nuances of the mechanics of revenue rec and really help to develop some good processes. Now, here's some businesses that typically have this problem. Do you sell large projects? Large projects could be, installing software. I know that some of y'all on the deal are working in installing software or previously worked at companies where you installed large software systems. That can be problematic, especially when projects go on for 2, 3, 4 months, sometimes 6 months, or possibly you have an annual contract. So do you sell large projects? The other thing that can really create problems is, do you take deposits up front? I know of a contractor in town, and for certain types of contractors, this is pretty common. You sign the order as a customer, and the first thing that you do is you give them a deposit to start the work. Well, if you're the company taking the deposits, if you're not treating that well and monitoring it closely, that can create a big problem. It also happens whenever you have like milestone billings. For example, when we built our pool at our old house a long time ago, the company that came on says, okay, we have milestone billings. Before we start, you got to give us X thousands of dollars or else we're not digging the hole. Once the hole is dug, then you're going to give us more. And what they're doing is constantly asking for money before each stage. Not too bad because the pool got done like in a month. But if it's a milestone billing and it's a long project, it's still a problem. If you're in construction, especially commercial construction, working on larger projects with major GCs, then you have a potential problem. It's complex accounting, and the bigger the projects and the more complex the projects, the higher likelihood that you're going to have an issue with this accounting. And I'm telling you, that dance between accounting and your operations folks, they better become best friends, or else it's going to be a problem. Sometimes you can tell when you have a symptom when your operations folks, and I get it, accounting folks aren't always the easiest to talk to, are dismissive of the accounting folks. They don't want to talk to them and everything else. But I'm telling you, as a manager or owner of a company, you need to make sure that that's a good relationship between those two, because you are relying on their good work to produce the numbers so you can make better decisions. Very important stuff. So here's my very simple example that I'm going to kind of walk through. And for all the CPAs on the call, yes, it's horrendously simple, but I'm just pointing out a few things about where this could create really bad issues with your numbers. And we're just focusing on the balance sheet, because the balance sheet's where you're going to see the problems first and foremost. And then in your income statement, that's where the problems really have bad ripple effects. We already talked about how we can really be jacking your margins around, and I'll kind of explain that in a little bit. So in the first column, we just have, our 4 groups, and I clustered deposits, deferred revenue, billings in excess of cost, because all those kind of work the same. They're different drivers of what moves them from deferred revenue into revenue, or from deposits into revenue, et cetera. But as a group, that's really a liability of work you owe your customer. You have received money in, but you have not yet performed the work. Now, in this case, some companies record their WIP separately, and WIP is work in process or cost in excess. So cost in excess means that you've done more work than you've billed for on that one job, but in total in this company has received a lot more money than they have actually done work. Now, two really important things here. You know how I talked about the Ponzi scheme effect? So in this company, they've collected $1 million and they've only done effectively, well, they have $900,000 of work that they haven't executed between the WIP and the $1 million. So $900,000 of work that they have not yet executed, yet they only have $500,000 of cash. So that tells us up front that they have already spent a healthy chunk of the cash that they have received in advance from their customers. Let that sink in for a little bit, because it also tells us that they're going to have to come up with some other funding to fund the jobs that they've already won. Now that starts to create a problem, because now to solve that, I'm either going to have to do a couple things. I'm going to have to go borrow money in from the bank to solve that funding issue to complete the project. I might have to get really expensive debt called PO financing, and that's expensive debt. It's not like a bank debt. Or, and here's where the Ponzi part comes in, I'm going to have to sell a lot more projects real fast and collect their money up front so I can solve this problem. And you can see where that can start building unless we accumulate enough cash over time to build up that cash reserve to start making these things equal. Now, it may not be as bad as what's represented there in that first column, and here's why. The real executional liability, the liability to do the work, is inversely related to your margin. So I'm just going to make this real simple and say that your gross margins are 50%. So I have deposits or deferred revenue of $1 million. So I've received $1 million and I haven't done the work yet. But the actual COGS, the cost of doing the project, is 50% or 500,000. So I may not be in that bad of shape, because 500,000 equals the margin. Now, it does mean that I've already spent my margin. It does mean that I still have a funding problem on my operating expenses, but I should have enough cash to complete the job. Now, if we stay with this example just a little bit longer, if you were trying to sell your company, I'm going to tell you that I would, if I'm on the due diligence side, I would eat your lunch, right? Because this is telling me that whatever I was going to offer you for your business, I'm going to deduct a big chunk of it to solve for this deficit, this funding deficit. And if you're not the wiser about how that works, I might try and deduct the full $1 million and not just the part of the cost needed to complete the project. This is a huge issue when it comes to selling your business. And I've seen several deals blow up because the business owners, they're walking around their country club valuation going, oh, I'm going to get 6x. And they might get 6x, although might not, because it's a country club valuation, not one based in reality. But then they come up with, well, what's going to happen with the working capital? And that calculation right there says that you have a working capital problem, and the amount that comes out of your proceeds is going to be reduced to fund the difference in these two items, because the buyer is not going to fund the projects that you've already spent the money on. Now let's move over to the other side. And I'm going to make a big assumption here that both these companies have done the exact same amount of work. They have executed the exact same amount of work. So irrespective, so we now have a $900,000 shift in these liabilities. So what does that tell us? Well, when these liabilities go from $1 million down to 100,000, that 900,000 is now showing up as revenue, right? So it's up in your revenue. So in that case, assuming that both companies have done the exact same work, one is now showing $900,000 more in revenue than the others. So you can start to understand how not treating these right starts to create extreme volatility in your reported gross margins. That's why it's really important that we understand the physical work completed, that you're monitoring your physical work, and that's reflected in your numbers. Now, here's the tricky part where your accounting folks and your operations folks need to be on the same page. So most operations folks don't manage dollars. They manage activities, they manage units, they manage hours, whatever the case may be. So in my business, we installed carpet. So we manage yards and man hours per yards, and those things. So my crews knew how many hours they had to install X yards. My subcontractors knew for 100 yards, they were going to get X dollars, no more, no less. I didn't care if it took them all day or took them 10 minutes. Our agreed price was X dollars per unit. That's all I got. So when you're talking to your operations people, you can't just talk about the dollars. You have to talk about the units, because that's how they understand their percent of complete. I've done 1 floor out of 10. I've done 2 floors out of 10. I've done all the wood and none of the carpet. So those type things help them to understand their percent complete. Now, your accounting folks need to help them understand what that's doing to their dollars and budgets. So that dance and those budget deals, we could do a whole nother segment on that, because I actually enjoy percent complete accounting, but getting into these conversations with your operations folks, very key. We have one client that's into, they do logistics management for installing products and finishes into commercial buildings. And so they have their warehouse and logistics, which is all about pallet positions and cube space consumption. Then they have the delivery to the job sites, which is truck size, number of deliveries, and number of cubes on the trucks. And then they have the space that they're finishing out, which is really dollars per room that you're paying for labor or dollars per hour. So you can see how those dollars versus the actual physical activity have to be talked about differently depending on who's in the room. Very important stuff. Some similar things would happen if you're in a big, I at one point in time also worked for a large company that did custom builds. They would build big burner systems that went into utility plants. And then we had to figure out how much pipe they've consumed, how many hours they've done, what's the total cost that they've completed. For others of y'all, if you're into software implementation and development, then it might be just looking at the man hours that you've consumed relative to the budget on the deliverables. As we go into the fraud part of this, you know, we always think about credit card fraud and everything else like that. It's stunning to me. Like, for instance, I was on a call this morning, and the people in this company probably has some fraud issues that are going on. And one of the first things that the CEO says, yeah, I find that hard to believe because they're, quote, a really good person. And that's where I come up with my Alfred E. Newman reference there. What, me worry? I have great people. And I'm kind of a nerd because I used to love Mad Magazine as a kid. But let me tell you something. Here's the #1 root cause of fraud. So back in the day when I was early in my accounting career, just got my CPA, I worked on fraud work and litigation support and those things. And what we learned is the #1 cause of fraud is performed by people who never intended to commit fraud. They're not some mastermind criminal. They're not some person over in Ukraine trying to steal your stuff, although that's a lot more common than it was. But most fraud that we deal with, other than the electronic fraud, is committed by people that have a big, overwhelming financial need. And that need could be caused by, you know, I have a loved one that's in the hospital, so healthcare costs. It could be caused by retirement. It could also be caused by drug abuse. Looks like I froze up there. By drug abuse, by alcohol abuse, by gambling. All the vices can cause it. It could be caused by, I need to put a kid through college. An overwhelming financial need and a shortfall. And what typically happens is they run across a transaction in which money got set aside and nobody called their hand on it. And then rationalization starts to kick in. And the rationalization goes something like this. I will just, quote, borrow money from the company, and I'm going to put it back when everything's okay on my side. That never happens because they never solved the problem on their side that created the need or financial urgency in the first place. So again, it keeps on getting bigger, and they keep on doing bigger and bigger transactions because nobody's catching them. So don't just assume that you have no fraud going on just because you have great people. Because if you do, you're going to look like this person. Oh my gosh, what the heck just happened? And your wallet's empty. I had a friend, 20, 30 years ago. He had this sweet little old lady doing his bookkeeping. And at the end of the day, because he really wasn't looking at the numbers and everything else like that, she ended up taking several $100,000s out of his account. In fact, some of y'all may know of it. What is it? Collins Street Bakery that's out there in East Texas. And I can talk about this because it's a public deal. Their controllers stole millions of dollars because of some fraudulent issues. Now let's talk about some of the most common areas where fraud occurs and how you, as a business owner, can help to prevent that. Now, number one, do you have employees or do you have ghosts? Right? That sounds very easy, but it's stunning how often the HR people or a manager in a remote location, they can put in a ghost employee. And if your HR and onboarding processes are weak, they can end up having a ghost employee on there and creating another line of revenue for themselves in that employee's compensation that's really coming to them. So there's an easy way that you can figure that out, especially and sometimes, unfortunately, that is frequently committed by the people in accounting when you don't have HR. Because accountants, let's face it, they're involved in a lot of these fraud issues. It's not just the people out in the shop. So as a business owner, how can you catch this? On occasion, I want you to look at all the list of employees. And if there's a single name that you don't recognize, you need to find out who the heck that is. If you're also looking at employees that are paid by the hour, and certain employees seem to be getting paid a lot of overtime, unusually so relative to everybody else, then you need to look into that too. Because those are two areas in which payroll fraud can happen. The next, vendors and their invoices. This can take on really two forms. One's more difficult than the other. But for companies that have weak controls over their vendors, over their vendor setup, over their vendor approval, it would be easy for me to send you an invoice and pretend that I'm a new vendor and says, you owe me for X, Y, and Z. It could be just that simple. And people start paying it. Or it could be much more malicious in that me, as your controller, I start creating fictitious vendors and I set them up, and that vendor keeps on billing the company over and over. And because I'm also in the approval process, I'm like, yep, okay, good to go, good to go, good to go, and keep on paying myself as a fictitious vendor. So again, the easiest way to catch that is to take out a list of your vendors. Find the ones that, find the ones that you don't recognize and inquire about who is this, what do they do for us, and what kind of services are they providing? Go look at some of their invoices, right? If it doesn't make sense to you, ask more questions. Asking questions is the number one weapon for finding these issues. Number two, the other way that this can happen, it's after you've gone through your list, is sometimes, because this happened in my flooring company, one of my project managers started to collude with one of my subcontractors to create fictitious change orders and submit those, and then they're splitting the money. Now, how that came about was actually my employee had a overwhelming, compelling financial need called a new girlfriend. And he really wanted to impress her. And I think he's actually saving up for a wedding ring, and he didn't have enough savings as it was. So he got with one of his favorite installer subcontractors, says, hey, buddy, this is what we're going to do. Now, luckily for me, the subcontractor was so nervous about this because he had never done anything like this before. And he knew that he was doing something improper, illegal. And so he called us and says, I don't know what to do. I have my relationship with your company, but your project manager is now asking me to process fake invoices, and we're splitting them. And I'm highly uncomfortable about that. I don't want to be doing this anymore, but I can't go back to him for fear that I'm going to get fired and get in trouble. So I'm coming to you. And ultimately, we had to go down there and go fire the person. The other area where you can have vendor issues is, let's say that you have Acme Brick Company and you actually buy products from Acme Brick Company. I have seen on occasion where Acme may have two vendor addresses. And so invoices can be mocked up so easily nowadays to look like an actual invoice from an actual vendor, because the graphics can be modified and scanned and everything else. And another invoice comes in that looks like it's to Acme, but the mail to is, or the pay to address is different. So you actually have two different vendors with a similar or same name, but different mailing addresses. Now, the easiest way to do this is, again, go through your listing of vendors. And if you see the same vendor or a very similar vendor name appearing twice, you need to examine that because one of them is probably wrong or fraud or something like that. And it's stunning how often this is done by somebody in your accounting shop. So if you have little me, sweet little bird in the back of the shop doing stuff, and you think I'm the most trusted person, trust but verify. Okay, let's go Ronald Reagan all over this. Just trust but verify. Now, there's some simple things that you can do before we get down to hating the internet to help create an environment to where fraud is unlikely. So what I'm going to do is I'm going to use your front yard as a great metaphor for this. In your front yard, if you have a security system, the most important thing about the security system of preventing somebody from breaking into your house is the sign in the front yard. They have done studies that show if I have two houses, one has a full security system and no sign, and one just has a sign, the one with the full security system is more likely to get broken into than the house with just a sign, right? Because who wants, if the burglar knows that there's obviously something going on here, they're not going to break in. The people that have hidden their security system, well, I could break in there. I didn't know any better. And let's face it, your neighbors don't really care when your alarm's going off. They figured that it was a messed up thing anyways. The same thing is going on with your financial security. So you may not know a lot about accounting. I get it. You may not know a lot about fraud. I get that too. But what you do know is a very important tool, and that's asking questions. Asking questions about, can I see the vendor list? You don't have to know what you're doing. Can I see the employee list? You don't have to know what you're doing, although we've gone over some tips. Can I see the most recent bank reconciliations? Can I see the most recent bank statement? Back in the day, when you actually got a big stack, a big, huge envelope, it would be great that you were opening that. Can I have, you always want to make sure that you have direct access, or at least read access into the bank account, or direct access. Those are very important. So the more that people think that you're looking over their shoulder, whether you know exactly what you're looking for or not, is a very important sign in your front yard. On occasion, you may ask your controller, hey, I'd like to see the reconciliations on XYZ account. Or if you have one of these big projects, my construction or the custom building, or one of your, if you have subcontractors, go look at the jobs that are over budget. Ask, why are they over budget? Is there a specific vendor that's causing these things to go over budget frequently? Then you might have a problem. But the more you ask those kinds of questions about, why is this thing more expensive than I thought? Where are these vendors coming from? Do we have all these employees? Can I see the bank reconciliations? Can I see the bank statement? Those things are very important. Now, nowadays, there's some fantastic electronic tools that also help, like in my company. I love my people. I trust my people, but there's only one person who releases money out of stuff. So we have a couple of technologies, Gusto for payroll, and we use build.com for all of our AP processing. Now, here's the great thing. Other people can put stuff into there. I then can look at every invoice that comes through, and I release the money, right? Now, a really large company, because mine's not all that big, a really large company, you're going to take on a different process, but you want to make sure that you have controls in place that where there's hierarchical approvals to release monies that go out, whether that's review and approval of the payroll registers, or review and approval of the check runs and which things are getting paid. And you want to scare the bejesus out of somebody, occasionally look at the check run. You want to look at the supporting documentations. If it's not on something like bill.com, God forbid that you're still writing manual checks, but if you are, start looking at some of those manual checks. You might want to have a hierarchy that says, hey, checks over X, Y, and Z need 2 signatures, or has to be verified from the bank, and the bank calls you. We'll get to that bank verification here in a little bit, especially when we get into hating the internet. But those type things are very important to make sure that you're in control and know what's going on in the company, or somebody else other than the person who's actually able to release the money or put money into AP is releasing it. Now, some basic internal controls is you want to separate people that have access to cash from the people who have access to transactions. Like, you don't want your payables person to be releasing all the checks or just processing it without somebody in between understanding what's going on. Some similar issues on receivables. Now let's get into hating the internet. I'm telling you, I don't know about you, but I probably get 20 emails a week that I know are phishing campaigns. It's stunning how much they try and make it look like that it's coming from my bank, or it's coming from, an important notice. I mean, back in the day, it used to be what the king of Nairobi was in jail, and if you just give him all your bank information and lend him $1,000, he would pay you back $1 million, stupid stuff like that. But it's stunning how often this happens. One of the biggest issues that we've seen that you've probably heard a lot about is people getting a fake email that comes in and says, "Hey, it's Bert. I'm the president of the company. We need to pay Jill ASAP. Please wire this money to her right now." Right now. It's stunning how often the controller executes that and wires the money right now. We actually had a case that we came across where the controller was literally 2 offices away from the person who requested that email go out and get paid ASAP, and they didn't walk down the 2 doors to verify that it was a legitimate deal. Because when the president talks, we're going to act and we're going to do it. There's another case that I read about where somebody did that, and it was $250,000 that their controller went out because he thought he was just making the CEO happy, because the email says, "Hey, I have to buy some property, I think it's a house, whatever. Please wire this to XYZ account ASAP because I need to, fund the close," or whatever. Well, there went $250,000. Because in those cases, you only have about 24 hours before it's out of the country. I mean, it'll go from your bank account to a bank in Minnesota, to a bank in Georgia, to a bank in the Ukraine, or wherever it's happening nowadays. We'll kind of give Ukraine a little forgiveness right now, and we'll say it's Russia. But anyways, so those things bounce very quickly. So you need to make sure your folks know what a phishing expedition looks like. Because it's frequently, open here. Hey, here's this payment that came in for you, and it's not coming through a normal payment system. Anything that looks like it's too good to be true, or it's asking you to click on anything, any kind of document link or anything else in an email, and you don't know and you didn't expect it, don't click on it. Even if you think it's coming from somebody you know. Like, I've got an email from myself, right? From myself saying it's really important that I open my own email. Because sometimes what happens is that attachment that you're clicking on that's urgent, well, it could be a Trojan horse. You open it up, nothing really seems to happen. Oh, I guess that was nothing. And meanwhile, this Trojan horse is going in there and starting to read all your emails, starting to find out who your controller is, starting to see your emails and how your logo looks and all this other stuff, who's in control. If they can't figure that out on your website, they'll figure it out that way. And then suddenly you start getting emails from somebody else in your company with authority to release funds, or they now know how to mock up emails from your vendors and everything else about sending money and changing the pay to, the remit to. Get those all the time. I'll have things that come in from, quote, my employees wanting me to change the bank account to XYZ bank account because they've changed their banking relationships. Okay, well, just call the employee. I never execute on that without talking to a human being, right? So as I kind of wrap this up, we're in the last few minutes, there's a couple of really great resources that are extraordinarily valuable and extraordinarily affordable. So there's one company called Traveling Coaches. And yes, this is a blatant plug for Traveling Coaches. I know this company very well. I've known Gina Buser for, 22 years, and she runs a fabulous company. Now, what they do is they train attorneys and the attorney staff about how to utilize and get trained on so many of the back office applications that are going through there. But one thing that they've really done is they have several products that are in fraud awareness and fraud prevention. This one that's on here called On Guard, it's really I think it's a 12-month training program in which each month your staff will go through a different training module to talk about the latest and greatest about what's going on with internet fraud. It's a fantastic program. It is super inexpensive. And the other thing that I want you to know is it's lawyer trusted. And what do I mean by that? Well, the basis of this company is they started out doing nothing but serving attorneys' offices. In fact, their biggest clients in the world are the world's largest law firms. So you talk about somebody that has a high need for security and to make sure their people aren't jacking up their files to where their confidential files and privileged files are being attacked by some bot that just came in, then this is the company you want to go to. So in fact, I think one of them might be on our deal. So let me check the list here. Let me see.
I'm here, Bert.
Dave's on, and is Rain with you?
Yeah, she's here too.
Yeah. So tell everybody like a 2-minute commercial here about On Guard. And I probably did it a disservice, but I tell you, when I've gone through it, I thought it was fantastic. And it's a very affordable solution for most mid-market companies to at least gain awareness and prevent that I hate the internet hacks.
Thanks, Bart. Happy to. I will say before I do that, that prince from Nigeria is going to get back to me any day. And also, not only do I talk to myself, but I do regularly send myself emails, and I'm not sure if they're fraud or not. So I appreciate both of those examples. Look, I've been at Traveling Coaches now for a grand total of 2 weeks. I've taken over as their Chief Product Services Officer, and I've done a deep dive into On Guard. And Bert's right. We try to build training about 15 minutes a month. Every month is a different topic. It's updated on an annual basis. And honestly, the short message that I can give you, if you want something that's designed to be relevant and meaningful and living for your customers, not just for their work life, but their personal life, because we know that people get compromised at home as well as at work, and it impacts the other, then that's us. I mean, that's where you want to go. And I would be happy to give anybody who emails Rain, our fields at Alterity Solutions at the bottom here. We'll give you a guest access to our learning portal and 2 weeks of free access to the On Guard curriculum. The other thing I'll say is it's delivered in a variety of different methodologies. There's everything from e-learnings to podcasts to live. You can have live training too. And so, yeah, just reach out, email us, start the conversation. We'll give you 2-week access. You can take a look at it. No obligation whatsoever. Now I feel like one of those infomercials, but
yeah, it did sound that way a little bit.
Yeah, it's terrible. It's terrible. I apologize to everybody on a Friday too. But anyway, thanks, Bert, for the time. And yeah, just let us know if you have any questions.
Yep. Tell Miss Jean I said hello.
I will definitely do that.
Okay. With that, and Dave, thanks a lot for the input. This is the Q&A part. You can ask me anything. If you really want to dive deeper into revenue rec and some of the problems, I do it's a whole nother presentation that I do to educate the ops and accounting folks on best practices. And again, this was just to raise awareness of some of the problems so that you know, is this me? And then go ask more questions. But if y'all have any questions, just unmute yourself and chime on in. This is going to be great. Y'all are letting me off easy on a hard Friday. So this could end up being fantastic.
Yeah, I just wanted to say thank you for this learning opportunity. This was great.
Well, thanks for joining us.
Hey, Bert, as always, wonderful hair. Just so impressed. Love it.
Okay. Okay. So says the member of ZZ Top.
There you go.
Okay. Any other real questions? Looks like we got something in the chat. Thanks, Kimberly. Glad you enjoyed it. Okay. If y'all need to contact us for any reason, there's my email. You can certainly find us on the website. If you want to talk about it in more depth, you can either email me, you can go to our website and call me, or you can just request time on my calendar through the website, through request a consult, whatever you'd like to do. But anyways, thanks a lot for carving out time on your Friday afternoon, and I hope you have a fantastic weekend. Y'all take care.
Thanks, Bert.